Hi everyone. So in this scenario, you have been told that you are a couple of important things that are a bit different to the others. You are a partner at a tax advisory firm. You've been approached by a friend of yours who runs a software company, and they have want to enter into a deal essentially where if you refer clients onto them or your clients onto them, and they make use of the software company, they will pay you a commission. Okay, so an interesting one, and one of those that aren't necessarily an ethical situation, or if that software company offers a great service, the product is a right fit for your client, this could be an appropriate arrangement. But remember, around fundamental principles, it is essential that both in appearance and in mind you remain compliant with the fundamental principles. And so we still have to talk through the potential threats that could arise. So we should know by now that we start with the framework. We look, is there potential threat, and what is the significance of that threat? From my perspective, we have a potential threat to objectivity or professional behavior or professional incompetence and due care. So any of those threats could, or any of those fundamental principles could be a threat depending on the nature of the service. And because we don't have more information, we can't exactly conclude. I.e., if the service from your friend wasn't quite appropriate, it could be a threat to professional competence and due care, because we're offering services that are not appropriate. Also professional behavior. Also, we are not giving objective advice in terms of what could be the best services for your tax client to use, and so we could have a threat to objectivity there. So any of those could be appropriate. It will be a self-interest threat, given that we could be receiving a commission in exchange for the referral. So the context here, we have a CASA. They're involved in tax consulting services, which would be considered a professional service in terms of the CPC, and so we have part 3 that becomes applicable. So we'd want to look at the CPC at the index, and if you go to the index of part 3, what would specifically apply? By breezing through this, it would definitely relate to fees and other types of remuneration. In other words, it's the type of payment we are receiving, and so that would be most appropriate, and so we'd want to look at what that talks to. There are a couple of sections of section 330, different ones that apply to different contexts. They obviously talk through overall some of the potential threats that could come into play, which we've already discussed on. Here they talk to contingent fees, which are quite topical. This isn't a contingent fee though, and it doesn't relate to an audit service or a contingent fee relating to our tax service, so that wouldn't be applicable. Then we've got here, which would apply, referral fees or commissions. So section 330.5 paragraph A1. And if we look at A1, it specifically says a self-interest threat to compliance with the principles of objectivity and professional competence and due care is created if a professional accountant pays or receives a referral fee or receives a commission relating to a client. Okay, and the examples there does fit the scenario we're dealing with. Okay, so we do know that this part does apply, section 330 specifically here, so we'd want to apply that to the scenario. Safeguards, yes, if we look here, examples of safeguards that could address the self-interest threat, and it gives 2 examples. Essentially, it would require you to disclose and be transparent with your client around the fact that you are receiving a referral fee from the software company if they decide to uptake the services. So by doing that, your client becomes aware of your potential threat, but they still are able to make the decision whether to adopt that software company or not, and the code says that mitigates this potential threat to an appropriate level. Thank you.